In today's video, I'm going to be having a look at what's really driving optimism behind the markets at the moment. Hello and welcome to another ACY Securities Hot Topics video. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first thing I'm going to cover today is that Wall Street is really optimistic at the moment. They are seeing optimism grow at record amounts, and that's evident by what we're seeing in stock markets at the moment. We've seen the Dow Jones hit record highs. We've seen the S&P 500 traveling its way up. We've seen a rotation of stocks happening as well. So a lot of people have been asking the question, what's driving a lot of it? We know that there's a lot of stuff going on behind the scenes with vaccines, and that's really the leading cause of it all. But there is this rotation that we're all talking about now. People are banking on the idea that in 2021, we are going to be seeing an economy that is booming. So let's have a look at some of the metrics that we've got behind it. First up to have a look at here is a chart of the Dow Jones. It has cracked above and beyond the 30,000 mark. Now, if we actually looked at yesterday's gains, there were only 3 stocks that saw falls in the entire Dow Jones index. Even Boeing, the one that is known to be a bit of a laggard in the Dow, was up 5%. We've seen banks up across the board, nearly 3%. Carnival Corp maxed out at 8%, but also saw a little bit higher after the session, nearing 10% for gains. And AMC Theaters were even up 15%. All of these have traditionally been the underperformers of the year. So what we're seeing at the moment is bounces in economically sensitive shares that are running their way from the vaccines. We're finding that what's going on right now is that people are really interested in the idea that in 2021, we're going to see that cycle change back over. We're going to see people, instead of looking at growth stocks, they're moving into the underperforming things. And this time of year is kind of common for that. We look at some of the stocks and companies that have been undervalued throughout the year. We readjust our portfolios. We consider where we might be heading next. And at this point in time, people are putting their money where they think it's going to be growing for the year ahead. And that means that we're likely not going to be having as much work from home. We're going to be seeing some solutions around the vaccines. And of course, it's not going to be immediate, but people are banking on it to be happening at some stage next year anyway. Now, the first things to take note of when we see that all the optimism has been boosting is obviously the vaccines. But yesterday, we've already covered the idea of AstraZeneca and the Oxford-based vaccine, which has obviously given us 3 different vaccines now to choose from. So maybe governments will have difficulty with choosing what they're looking for, but regardless, investors are focusing on the front that we actually have vaccines available. So from this perspective, we can see that the vaccine rally is actually continuing. Number 2 that we saw yesterday was looking at what's going on with the transition between Donald Trump and, of course, President-elect Joe Biden. We've officially heard that they've effectively conceded without actually conceding. They're starting the transition process, and we've already started getting some benefits out of that. People are looking at this to be a little bit more confident that there is not going to be as much as an issue with a contested election, and that people will likely start seeing a little bit more stable politics coming in, as opposed to seeing what we've seen in the past, which has been quite an aggressive form of political challenging, especially when it comes to international trade and, of course, international relations. So we're trying to see if we're going to get a bit of a wind down on that, which is what people are starting to put their money into. Now, the third piece that's really come along here is the announcement of the former Fed chair, Janet Yellen, becoming potentially the next Treasury. So we've currently got Steve Mnuchin in place. The advantage of getting someone like Janet Yellen in the Treasury is, first of all, it's going to be the first woman treasurer that we've ever seen. But the next part will be that we're seeing something that has got policies that we've already seen before. We've seen her in action. She is experienced. She has worked as the federal chair for the Federal Reserve. So we are likely to see similar policy mandates that she was implementing back then to now, which brings a little bit of confidence in the idea that we kind of can anticipate how we might see the economy move and how we might see the Treasury try and operate it from a fiscal capacity as opposed to a monetary capacity. So that is also a positive side for markets at the moment. Looking forward at some automakers, Tesla has reached a $500 billion market cap. They've been riding on the coattails of this vaccine run, but they have also got some of their own metrics in this as well. A number of the companies that are involved with Tesla are also rising up. So right now we've seen a 547% increase in Tesla in 2020. We've also seen the all-time high since the stock split of $543.17 per share, but we're likely to see it go further. The inclusion into the S&P 500 is likely to bring in a large cap demand, particularly on the mutual fund front. People are going to want to be adding this into their mutual funds. They're going to be wanting to add it to their portfolios now that's in the S&P 500. So we're likely to see that rise. At this point in time, I haven't got a real estimation. I have seen some adjusted or approximate figures that there might be a jump of about $8 billion in value when it goes up. But we're going to have to play that by ear because that is really just a guesstimate, not an estimate. Now, looking forward to what's happening as well in the UK with automotive manufacturers, they've announced a couple of times already that Brexit is going to be a problem. Now that we're getting really close to that end-all date, UK production and people who are behind the scenes of automakers are a little bit concerned. They're looking at expecting of seeing a fall in production by at least a quarter, which is nearly pushing it under 1 million cars per annum being manufactured. The estimated losses at this stage are in the 70 billion USD mark. Of course, in 2019, if we actually look at how dependent the UK automotive manufacturing sort of side of things and exporting side of things is to the UK, 80% of 1.3 million cars made in the UK in 2019 were exported. Of those, 55% went to Europe. So that is massive numbers. It is a huge hit to the automotive manufacturing scene in the UK. And even from an import perspective, that the UK aren't going to get out of this unscathed, but neither is the EU. Imports account for 85% of 2.3 million total cars sold in the UK in 2019, with a large proportion of those coming from Europe. So we are anticipating the automotive sector in the US to probably be seeing a little bit of a hit, or at least in this instance, what sounds to be quite a big hit. Now, moving on to the news ahead of today, we have Australian construction on a quarterly thing just to see how far that's trending. We've also got the New Zealand RBNZ governor all going to be speaking. From there, we have an ECB financial stability review going on, and of course, preliminary GDP figures for the US and unemployment claims. And don't forget, the big one is going to be seeing the FOMC minutes from their most recent meeting. Now, if you do have any questions on today's video, perhaps on my webinars, please feel free to shoot me an email at talktoal@acy.com. And don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.